Happy New Year to everyone. We'll start the new year off with Chart This and Gary Wagner coming up. And with me now on the first trading day of 2014 is Gary Wagner. Gary, thank you for joining me today.
Welcome to 2014. My pleasure as always.
Now, Gary, I want to point out that in your last show, you did mention that you thought gold would hit a bottom at between 1150 and 1181. Now, on Tuesday, it did reach 1181 during trading early morning, and it jumped right back up. What do you see moving forward? Could we actually maybe test 1150 gold?
You know, it's an interesting market right now. We felt that it would be under pressure. We felt that it would at least test the lows at 1181. I think the intraday low was around 1186, so we came really, really close. Of course, New Year's hovering right around 1200. The $64,000 question is whether or not we will see gold find some sort of a base and move up from 1200 or whether it will move lower. My fear right now, is that there's a possibility that we'll see one more really down leg, but I am looking at activity that's showing us in terms of a cycle, a bottom. Maybe it should be sometime around the first quarter, but within a couple of months of this new year.
Now, obviously, during the holiday season, trading volume was very thin. Gold was very range-bound, usually hovering around $1,200. Now, is 1200 a mark that we're going to be seeing a lot of in the first period of this year, or do you see that maybe shifting in the positive or the negative?
Well, 1200, all of the century marks, of course, are very important as they go through, whether it finds support or breaks through and it becomes a area of resistance. The wild card right now, as far as I'm concerned, is Yellen. It's the fact that the Fed is bringing in a new chairperson, and how she handles the tapering, whether or not the economy is really moving along is really going to determine, I think, or have a great influence, I should say, as to where future gold prices are going. My charts tell me it still could be under pressure, but there is always the opportunity when we have a changing of the guard, so to speak, that what we will see is a very, very dovish Fed, and that, of course, would be bullish for gold.
All right, great stuff, Gary. Let's jump into it.
On today's show, in honor of a brand new year, it is January 1st, 2014 when we are recording this, and we also currently have the precious metals up about $7, $8 in gold, about 35 cents in silver. And the real question has got to be is, have we found some sort of a potential bottom as the market bottomed out towards the end of last year or 2013? And to do that, we kind of want to look at a chart that's going to compress time enough to give us a real indication. Standard candlestick chart. This is a weekly chart. It has a couple of different Elliott wave models on there, but most importantly, we have some fib retracements. And this fib retracement that we're looking at really covers the entire span of the most major rally we have ever really witnessed in gold, in which we saw gold move from under $700 to above $1,900 or $1,200 move in a period of time of only a few years. Of course, once we came to this record top here, we really went into what I'll call a tight consolidation pattern with 1800 on the top and I believe it was 1535 on the bottom. And there's no doubt you can see this tremendous drop as this market broke through there. We had the market spike down, and if you'll notice, we have two different fib retracements. We have our shorter one, which really begins at just above 1,000, 1045 right here. And I believe this longer one that we just spoke about, if we look at the 61% retracement, and the 61% retracement is of this entire move here, that takes us to roughly 1141. Now, the record lows that we've seen since the market has dropped have been 1181. We had that back in July of 2013, and then most recently we had this double bottom that we have been talking about at about 1186. Market is now well over 1200, and it is my sense or my feeling that we could see a little pop into the market, and if we in fact do get a pop, The real resistance, the major resistance that we could see, major resistance really wouldn't come in till about 1250. However, before we get to that major resistance level, and you can see that 1250 right here, I've moved back to a very, very short-term 60-minute chart. We have to look at our current levels. So I have pegged resistance at 1211 and then again at 1221 and 1227. And as you can see, depending on how the market closes, if it in fact can close above 1211, I would think our next real level of resistance is going to come in between 1221 and 1227, and then we've got another level at around 1240. Now I'm very excited to announce that we will be starting a bonus content membership. Membership, of course, is going to be free, and you can go to our site and sign up for that. There'll be more information and details about that. If you want information and want to sign up for the Chart This bonus content, you will be required to be a member through 2014, but as I said, membership is free. And for those that want to sign up for the bonus content, go to thegoldforecast.com, then simply go to After the Show. And after the show is where we keep our bonus content. You will see a link here to go ahead and sign up for the bonus content after the show membership. As I said, it's completely free. Again, Fibonacci retracement and whether or not we have seen or found a double bottom in gold.
Excellent insights as always, Gary. Thank you very much for joining me today.
My pleasure as always, and want to wish the entire staff at Kitco, as well as all of our viewers of Chart This, a very prosperous, healthy, and happy new year.
And that wraps this edition of Chart This. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can find me on Twitter at Alex_Letourneau. Enjoy 2014.